Hi, morning traders. Andy Demi here. Hope you're having a great day. Hope you're having a great week. So it's coming up to my birthday this weekend. So trying to think of some exciting things to do for my lockdown 40th birthday. I know, don't tell me, I know I only look 21, but unfortunately I am turning 40. No trip to Vegas. Looks like I'm going to be celebrating at home, but it's fine. I'm sure I'll be having a lot of fun. So I'm going to be giving myself the day off on Friday. My birthday's on Saturday, but treating myself to a day off for a change. Okay, so not going to be trading on Friday. But I will do my best to send you guys a video, as I know you're probably sometimes waiting for my videos, if you like them, that is. Anyway, I'm rambling on. So I want to talk about an economic concept today. And you might be thinking, well, you know, what's that got to do with trading or anything? Well, it does. So it's a concept called sunk cost. Okay, it's a sunk cost bias in particular. So what is a sunk cost? Well, essentially it's when you've invested some resources, it could be time, money, energy, whatever it is, into something. And, you know, because you've invested in something, you basically then have this kind of feeling that, well, since I've invested something in it already, I have to kind of carry on doing it. Okay, so happens a lot. You know, you see people say, well, I've done a 6-month course and, you know, after 5 months I've got no results, but I need to finish the last month, or whatever it might be. Okay, so you're doing something, it's not really working, but because you've basically spent money on it, you feel like you need to finish it. Okay, and I'll be honest, I mean, I probably have this in other areas, like, you know, I'm very much digressing. I promise you I will get to trading, but like, you know, you might order a takeaway, try something new, and then find actually it's not very nice, or it's not the best, and then you kind of feel, well, I've bought it now, what am I going to do, throw it in the bin? And you kind of just eat it. So I know that I do that. I hate to waste food, so I guess it's kind of like, well, I've kind of committed to it now. And believe me, during the lockdown, we have ordered some new takeaway places, and they haven't always been the best. So, you know, I get why people do this. But in trading now, let's talk about trading. Where is this applicable? Well, if you think about it like this, you know, when you take a trade, it's really so much harder to close that trade out, even if you decide that it's not a trade that you want to be in, right? Like, it's like when you look at the markets without a trade on, and you think, well, that's not a trade I want to be in, so you don't take the trade. But yet, once you've kind of got in the trade, irrespective if it's losing or winning, and you decide, actually, I don't want to be in this trade, maybe it's not a good trade, or maybe it's not acting right, or whatever it is, and then it's kind of like, well, why do you stay in it then? Well, maybe because you've kind of invested in it already. And so it's kind of that feeling, well, what if I close it and it goes and flies towards my target and then I miss out, right? But you've got to train yourself to close it, okay? It's a loss. Or whether it's winning or not, it's a trade you don't want to be in, right? And you've got to be able to close the trade. You know, I was just speaking to a student who basically said to me, you know, he knew he needed to close a trade out because it wasn't the right trade, it wasn't doing the things that he needed it to do, and he didn't close it. Why? Because he's invested in it. And it's, you know, what if it goes without you, right? That feeling. Well, look, you've got to come up with ways to deal with that. So, for example, one of the things that I do is, like, you know, I took a trade on euro dollar start of the week, and I did well. And then I took a second trade on euro dollar, thinking it was going to go down. It was a nice, really nice sort of 618 pullback. And then it just wasn't acting right. So I was 20 pips down, and I cut it. I cut it loose because I thought, you know what, I'd rather take the small loss. And then, if the market comes back down, I've set an alert a little bit lower. If it does come back down, I'll be alerted, and I'll go back and I'll reassess it without any emotions, and then I'll take another setup and I'll take it short again, and I won't necessarily miss the trade that way. Okay, so I plan things around dealing with those situations, so then I don't feel bad if I miss the trade. Like, if I close the trade and it starts to go back the way I thought, maybe I'm not going to get the exact same entry or the same setup, but I still have the opportunity to assess it without that kind of baggage. So just listen, learn to close those trades, close them down, and then have a plan, build a plan around it so that you can not miss out on the trade, so that you don't have that worry about missing out, okay? So a trading view is very, very good for that. You can set up alerts for everything. If you need any advice on that, let me know. But it's a pretty simple platform to use. It's great. I mean, I do use MT4 as well, but trading is really, to me, it's quite superior. So anyway, hope that helps, guys. Sorry I've been rambling on today. I wish you the best of days. Good trading, guys. Take care. Bye-bye.